Welcome to Market Analysis. That sound marks the end of trading for today. And joining me on the program, we have Churchill Ogutu, who is from Genghis Capital. He's the head of research. Thank you so much for making time for us.
Thank you, Abby.
And let's get straight into it, Churchill. A lot of activity happening in the economy. The president recently did make some major announcements on just how the economy has been performing. And he's yet to lift the ban on sale of alcohol that is in the bars. And over and above that, it seems like the economic activity is gradually rebounding.
Thanks, Abby. And from the statement that came last week from the president to the effect that growth has been around 4.9%, I tend to differ from that. And just looking at the statistics that we've had, in particularly for the second quarter period, that's between April to June. On Tuesday, we've seen the report from the unemployment from the Kenya National Bureau of Statistics, whereby that print has jumped, doubled from 5.2% between January to March, now to 10.4% in between April to June. So that is also another indicator that we can't see a doubling in unemployment rate, and yet growth is somehow more or less steady from the last time that we had 4.9%. People have lost their jobs, and also looking at the consumption, how people are consuming, looking at some of the indicators, be it co-inflation, which strips out food inflation and fuel inflation, has been steady. So that is telling us that even the economic demand has been quite muted.
So Churchill, if I get you right, what Kenyans should expect is at the short term, we're not going to see a lot of should we say, economic activity at its peak versus what we are currently seeing, which is sort of stagnation in terms of key projects. We're seeing unemployment numbers also tilting upwards. But when we look at the big picture, are we likely to see business confidence fully coming back to the economy?
I think the business environment, there's a huge cloud of uncertainty that is still there, coming from the fact that this whole uncertainty has been brought by COVID-19. We still don't have a vaccine. Of course, Russia made a huge announcement last month, but so far it's been hot air, hasn't been proved to work across the globe. So
still in the trials.
Yeah, still in the trials, yeah. So until we get a vaccine, that is one of the factors that will also catapult even some robust uptick in growth. And what you're seeing even in other developed markets, there's been some stimulus injections that were done at the beginning of this pandemic period, that's between March and April period, but that is somehow fading off. And what we are seeing even, there's been some huge, significant layoffs in some of the companies.
All right, and still staying with this, Churchill, because for many Kenyans, the reopening of our borders by the international flights resuming signaled some sense of hope, especially for the aviation sector and also the tourism industry, which recently was abuzz with activity when the wildebeest migration was happening down in the Mara.
Yes. Primarily, I think that what will be boosted in the short term is now the local tourism, as opposed to the international tourism. Why? At least there's that robustness in movement of people, and because of that fatigue that was there once people were somehow locked, that has been lifted, so people can be able to move. So local tourism is the major boost. From international tourism, I still see that there's that fear of second wave contagion, even from the source countries of the tourists. So from that perspective, I don't see a robust uptick in international tourism in the short term. In the near term, in the long term, once at least vaccine has been found, or once even those developed countries where the tourists come from have started getting some rebound activity, even their disposable income starts going up, because right now we are in a survival mode. And if you look at the bucket list of things to do, you find that going to a vacation comes down. It's not top of the list. People are just on survival mode. How I can be able to pay my rent or mortgage, or how can I be able to survive the next day? So once there's that certainty in the growth outlook, even in the global market, that's when you can see some robust vibrancy in the tourism.
All right. Very interesting sentiments there, Churchill. Let's shift gears and talk about how the general market has been performing. That is the stock exchange. We've seen quite a number of activities from several banks releasing their earning results. We've also seen some interesting acquisitions in this period, with which we've seen the likes of Cooperative Bank acquiring Jamii Bora, now converted it into Kingdom Bank. And from the market top gainers this week, you're seeing Cooperative Bank is actually up 11.74%. Talk to us about what this acquisition means for the bank moving forward. And on a general note, has the banking sector been able to shrug off the pandemic lag?
Starting from the last question that you've posed, and looking at the numbers, because the better part of August is when now we started seeing the first half earnings from the banking sector, of course with other sectors, but in particular for the banking sector. And some key themes stood out for us. One is the level of provisioning. We're still under a huge uncertainty. So most of the banks were now provisioning for bad loans, that the loans that they had even prior to COVID-19, which were good, might turn toxic even in the course of the year. So there was that high level of provisioning by the banks, and that had an impact even in their bottom line. All the banks recorded a dip in profits just because of that perspective. Also, the other issue was reduction in transaction activity. Most people not having disposable income, most people not even going to the branches. So even that level of transactions reduced even in particularly the second quarter period. That's where COVID-19 was quite acute, and that reflected even in the numbers that we saw released up until last week when the last listed bank posted their earnings. So those are some of the key themes that have been playing out. Of course, we've seen that even most of the banks are trying now to either reduce their costs, and right now there's that movement into alternative channels. And going forward, we are seeing that a level of mergers and acquisitions will now play out. It may not even be in the short term, but in the long term.
Correct.
Now, taking you back to the Kingdom and acquisition of Jamii Bora, this was announced even prior to COVID-19. This was something that was in the pipeline as early as March this year. So they just concluded it sometime early last month, and that was finalized and has now been taken over by Kingdom Securities.
And finally, it would be unfair for me to end this conversation without talking about aviation. We've seen the national carrier, Kenya Airways, really flying into turbulent times. The airline is looking to actually send home over 650 employees. At the same time, it has cut back on some of its key routes. What does this signal for the airline at that time when it is also in the middle of a nationalization plan?
Well, of course, aviation is one of the hardest hit sectors coming from COVID-19. People are not flying as they used to do prior to COVID-19. So that has been a hit on Kenya Airways. And we've seen even in the last couple of months that there's been a trimming in their staff costs. People have already been laid off from KQ. So that has been a direct impact as organizations start to reduce their costs in this volatile environment. Remember that there was a time that even domestic skies, international skies were shut off from them. So the kind of revenues that they were relying was just on cargo movement. So right now, at least with the reopening up of the skies, be it domestic and also international, so there's that kind of revenue starting to come, but it's still lower than pre-COVID-19. We are seeing that even on a global level, revenues for airlines are estimated to dip by up to 90% from the levels that were there in 2019. So that's a direct hit in aviation sector players, not only in Kenya, but across the globe. So we're seeing that most airlines are starting to either reduce their workers, starting to come up with cost rationalization measures. And that is also what we are seeing even with KQ. And of course, it's coinciding with the renationalization of Kenya Airways. Right now, the stock has been suspended because there was that upbeatness, because Kenya Airways had dipped over the years
Yeah.
in terms of the price level.
Yeah.
So there was that robustness, excitement by investors just prior to that, and that led to the stock being
Suspension.
suspended for 3 months. So that has been in play. So we're just waiting to see. But I think that once National Assembly comes back to resume their sittings, that will be next week. They might now start legislation on how they can better renationalize it. But I expect that this process will be kicked further down the road. So I expect that still another suspension will be extended once these 3 months elapses. Yeah.
Okay. Thank you so much, Churchill, for your great insights. Well, coming up next is Markets 101. Well, time now for my favorite segment, and that is the questions from our viewers. Today we have a question from Tony Evans, who's asking, what does it mean for a stock to be suspended? Churchill, over to you.
Thank you, Tony Evans, for that question that I had alluded to in my earlier presentation. What does this mean, stock being suspended? It happens whenever a listed company has any restructuring news, be it a takeover or be it some reorganization in the company. So because of the price volatilities around those kind of announcements, so the CMA has to suspend that stock from trading so as to reduce those kind of volatile trading. For example, if I may take you back to something that has already happened, prior to the acquisition of Kenol Kobil by Regis Energy, they had to suspend that stock because of some opportunistic investors may come in and distort the pricing. So they had to suspend that stock from trading until that acquisition process came to an end. And that is the same thing that is happening right now, where we are seeing Kenya Airways has been proposed to be renationalized. And we saw a 40% jump in the price just after that announcement came. So to curb uptick in prices, so they had to suspend the share trading in that stock. But ultimately, the investors who own shares in that stock, they will be paid off once the acquisition or this renationalization has already been effected. Thanks, Tony Evans.
Thank you, Churchill, for that very concise and clear interpretation of that question. And we do want to assure the shareholders that their money is still intact. Well, time for us to walk you down memory lane, and that is a historical fact coming up. Well, from that's where we bring the show to a close. Many thanks for your company. And remember, you can always engage with us on our social media platforms appearing at the bottom end of the screen. To my colleague and host, thank you, Churchill, for being with us. And let's keep doing this.
Thank you, Abby, for having me to this show.
All right. Well, see you next time here on The Trading Bell.